The modern investing landscape is filled with distractions. It's almost impossible to get away from the noise. Every day there are dozens of ETFs being launched and even more influencers getting paid to promote them. In this video, I want to share with you the common tactics I have seen YouTubers use to trap young investors. I am 29 years old, and the most important thing that I learned throughout my investing journey in my early 20s is the realization that investing is a solved problem. Most DIY investors, and I mean 99% of them, need to invest in portfolios that are globally diversified, low-cost products like VEQT or XEQT. If these funds are too aggressive for you, there are other excellent alternatives like VGrow and Webull. The fact of the matter is that this is not an opinion. It is as close to as a financial fact that we can get. And there are mountains of evidence to support this. Don't just take my word for this. I have linked Ben Felix's video on where he tries to explain all of the research behind this recommendation. It is an excellent video, and I have linked it in the show notes below. The tragedy that I continuously see on YouTube is that despite the evidence, financial YouTube is filled with several snake oil salesmen trying to deter you from a path that actually works. And I use this term very intentionally, the term snake oil. The analogy just writes itself, right? We have a proven medicine. In this case, it's a financially diversified low-cost index fund. Yet, we are being distracted, in fact bombarded, by these snake oil salesmen trying to sell us alternative strategies like covered call ETFs, individual stock picking, crypto, swing trading, and the list goes on. We have no evidence that these strategies work over the long term for the average person. In fact, we have plenty of evidence that they don't work. So the question is, how do snake oil salesmen, aka these financial influencers, convince the audience that their products actually work? Well, they just look at the tactics that the alternative medicine industry has used for centuries. And I'll be going over 3 such tactics that I have seen being used over and over again. The first one I'll be going over is what I call manipulating definitions. This is where the influencer uses the common industry terms and misconstrues them, or they straight up just make their own definitions. And this is a tactic that they use to make themselves sound smarter and more sophisticated. And a masterclass of this tactic in action is a recent video that Adriano made titled NAV Erosion, Myth Debunked with Grade 4 Math. Wow, what an enticing title. I wasted 30 minutes watching this video hoping to be educated, but to be honest, it was a complete waste of time. And this is very evident 3 minutes into the video, where Adriano comes up with this toy example where he compares an S&P 500 index fund like VOO and then creates these 4 other imaginary ETFs with different levels of distributions.
There's VEQT, there's VEQT3, and there's VEQT4. All 4 different ETFs. The exact same stocks. I use VEQT because I'm basically thinking of the S&P 500 here. So exact same stocks, fee, strategy, everything is the same. Everything is to go further. The yield or the distribution rate is higher and higher. I'm just simulating that.
And he claims that, hey, if the total returns for all of them are the same, then it would be incorrect to say that any of these funds have NAV erosion.
All 5 ETFs have the same exact total return after 1 year, right? How can VEQT 3 and 4 get the tag NAV erosion, but VEQ and VEQ1 do not? It makes no sense. NAV erosion is a myth.
So I had to cut through a lot of the video to get to the crux of his argument. And all of this yapping was to educate us that the only thing that matters is total returns. And here's the thing. In this simple model that he has, I 100% agree. However, if you take a step back, this is a classic case of a straw man fallacy. And the way this works is that you create a simple version of the argument and then debunk that simple version and claim victory over the more complex argument. In this case, the simple investing model that Adriano makes completely ignores all of the context and all of the complexities that NAV erosion conversations have. Assuming that all of these funds have the same returns is quite the leap, because we know that covered call ETFs are plagued with structural issues that affect total returns, like high distributions or high yields like 50, 60, sometimes 90%, capped upsides that plague covered call ETFs, higher fees due to the call options inherent to the strategy, the tax inefficiencies that come into play when you get those distributions. And some of these funds don't even hold the underlying asset. They hold a synthetic version of the underlying. And the reason I bring all of them up is because all of these reasons affect total returns. So most covered call ETFs have a negative return when you compare them to the underlying. So assuming that total returns are the same across these funds is an absurd assumption. The video doesn't get any better as you continue. Later on in the video, we get a full minute of Adriano trying to explain how much he dislikes the word erosion.
The NAV goes down over time. People say NAV erosion. Erosion, the problem I have is the word erosion, because that has a connotation around it that it's a loss. Erosion means it's disappearing. You're losing it. It's gone.
Okay, so it's confirmed. Adriano really doesn't like the word erosion. He thinks that it has bad connotations. This is what I call a semantic argument. And it is the weakest play in the book for debunking anything. It's like if your partner catches you cheating and instead of addressing the allegations, you spend an hour arguing over the definition of cheating. Semantic arguments like this are usually a distraction, and he's distracting us from the fact that there are serious underlying issues in covered call ETFs that affect total returns. And if total returns are the only thing that matter, and we already know that covered call ETFs underperform the underlying, then by your own definition or the example that you showed us earlier, wouldn't that mean that those funds have NAV erosion in them? None of these questions are ever answered, but let's just continue watching the video in an attempt to see if there's any useful nugget of information here.
Does NAV erosion, I would say capital erosion is a better way to say it. Does investment in erosion actually exist? I would say yes, it does.
His final argument in this video was another semantic argument where he claims that NAV erosion doesn't exist. But what he admits to is that capital erosion exists. And like I said, I feel like this is arguing semantics. Adriano, I really don't care about what you call this. I mean, you could call this the flying spaghetti monster, for I care. The name doesn't really change the underlying reality that something is indeed eroding in these funds. And the remaining of the video doesn't even address if capital erosion exists in covered call ETFs. All of this discussion is just sidestepped and ignored. This video was a masterclass of distractions and spending 20 minutes not answering anything. A second, more common strategy that snake oil salesmen use is relying on testimonials. Right? I mean, think about it. When you don't have evidence or research on all the claims you're making, the next best thing is to find gullible people who will put their name on the line for you. And I genuinely feel bad for them. And Adriano has several of them. He will show you 5 people who are killing it in the FIRE movement using his teachings and his methods. This line of thinking is fundamentally flawed. If I showed you 50 people that won the lottery, it doesn't change the fact that it is incredibly unlikely to win the lottery. Testimonies are riddled with survivorship biases. And Adriano just handpicking his testimonies is the definition of this bias, because we don't see the thousands of people for whom the strategy failed. And to be clear, I don't think Adriano is malicious here, or the people that are giving their testimonials are malicious. I just think that neither of them have an understanding of how these products work and what their long-term ramifications are. I think it's just the case of the blind leading the blind. Finally, the other most common tactic that these snake oil salesmen use to justify these alternative investments is the rebuttal, hey, at least these products help normal people get started into investing. And it's better for them to do this than being in cash. My charitable read on this is that I agree, but that doesn't make the product good. The way I think about this is like alcohol. If in small amounts, alcohol can help someone eventually quit a harder substance, then yes, that is a fine temporary trade-off. But we don't want to be delusional in saying that alcohol is a healthy thing to consume and that we need to consume it every single day of our lives. This way of framing things would be a huge mistake, and this is exactly what I see in the finance space. The base case still should hold in that most people should be investing in a low-cost, broadly diversified index fund. And everybody should try and minimize these junk alternative investments as much as possible. It's not healthy to rely on these weekly, monthly dopamine hits that you get every time you get a distribution. That is the exact opposite a long-term investor should do. This video is getting long enough, and if you guys found this entertaining, I can create a part 2 where I can talk about other common tactics that these financial snake oil influencers use to trap young investors. But to finish this video off, my message is simple. The path that you follow, especially when you're young, dedicates your success in this financial journey. The financial mistakes that you make in this journey compound. And they compound the same way like everything else in the finance world. The way I navigate this journey is by sticking to a proven path. Because to me, it makes no sense to put my hard-earned money into a strategy that has no proof of working. And so that's why I invest 100% of my portfolio in VEQT. I have looked at the mountains of evidence for the strategy, and I'm convinced that it's the only one that works. So do your own research and stay safe out there. And like always, I hope you learned something, and I will see you guys next time.